Learning Objective 2 introduces us to one of the first tools that we can use to analyze financial statements, and that is the horizontal analysis. Just as it says, we're going to look at financial statements from a horizontal perspective, year to year to year. And as your text says, there are several decisions that a company makes that depends on whether sales are increasing or decreasing. Is inventory building up or decreasing? What about our cash, our accounts receivable, our liabilities? And so we're looking at trends in our financial statements, and sometimes it's nice to have more than just the raw number. A percentage helps us to actually understand the significance of an increase or decrease in our organization. And so what we're going to look at in the horizontal analysis is, like it says, sales may have increased or even decreased, but in isolation it doesn't help us. What we would like to see is that sales have increased, and they are also increasing faster than cost of goods sold, which is generating an increase in gross profit. Or it could be the opposite. Sales are increasing, but cost of goods sold are increasing at a faster rate. Thereby, we are generating either static or declining increases in gross profit. So this horizontal analysis helps us to take an overall perspective and picture of our financial statements and how they are changing from the income statement to the balance sheet to the statement of cash flows. So it helps to be able to understand how all of the items on these financial statements tie together. So for example, if we want to look at a change in sales, if sales have gone from $803,000 in 2017 to $858,000 in 2018, we can very rapidly identify a $55,000 increase in sales. How do I know if that is significant? Well, what is the percentage increase? Our change of 55,000 divided by our base year of 803 tells us that it is a 6.8% increase. And so if I can compare this increase from year to year to see that the change is going from 6.8 to 7.2 to 7.6, then I can see a steady increase in sales, or unfortunately if it's going the opposite direction. Here's an example of the horizontal analysis in your income statement. We see sales have increased from 2017 to 18 by 6.8%. Cost of goods sold, on the other hand, only increased by $4,000 or 0.8%. Leaving us with an increasing gross profit of $51,000 or 17.3%. So the percentages help to give us a better perspective of what these raw calculations provide. And this is even better when I can compare it for a period of 3 to 5 to 10 years to do like a long-term analysis of the changes in our income statement. We can also calculate, and will calculate, the horizontal analysis for a balance sheet. So in the balance sheet we see that cash decreased from $32,000 to $29,000 from 17 to 18, a $3,000 increase or a decrease, or a 9.4% decrease. On the other hand, accounts receivable have increased 34%. Merchandise inventory is building up slightly with an increase of 1.8%. So you can see how the percentages give you a better perspective of what's going on than simply a $3,000 change or a $2,000 change. We see the same thing in the liability and stockholders' equity section. We're simply taking year 1 divided by year 2 to come up with a change, or we can take our year 1 minus year 2 is 5,000 divided by your primary or base year to get your percentage. Very easy. We can set this up in Excel and see these calculations very quickly. Learning Objective 3 gives us the same type of review of a vertical analysis of our financial statement. So now instead of going horizontal, we're looking vertically. And so on our income statement, we'll look at everything as a percentage of sales. On our balance sheet, we'll look at everything as a percentage of assets. We can see that happening in this particular example. So for example, we can see that cost of goods sold, $513,000 divided by $858,000 is 59.8%. Well, how do I know if that's good or bad? Well, how does it compare to prior years? In 2017, the same percentage, cost of goods sold divided by sales, was 63.4%. So cost of goods sold as a percentage of sales is decreasing from 63% to 60%. Now, cost of goods sold itself is not. It went from 509,000 to 513,000. But as a percentage of sales, it is decreasing. And this would also carry us back to the financial statements that we saw earlier. Come on back to our income statement, where we saw that cost of goods sold is increasing much slower than sales. Okay, so we should be able to make the connection. Cost of goods sold is increasing slower than sales, then that would lead us to the results, excuse me, that we see here, where even though cost of goods sold is increasing very slowly, it's not increasing as fast as sales is increasing. That shows us that cost of goods sold each year is a smaller percentage of those sales. And as a result, it generates increasing percentages of gross profit. So everything here is a percentage of sales. We can see that selling expenses pretty much have remained steady. They are increasing right in line with sales. Administrative expenses have decreased somewhat as a percentage of sales. Not only have they decreased as a percentage of sales, they've decreased overall, 123 to 118. So the vertical analysis, once again, everything as a percentage of sales on the income statement, everything as a percentage of assets on the balance sheet. So what I can see is that in 2017, cash made up 5% of my total assets. With cash decreasing, it only made up 3.7% of my total assets in 2018. Okay, so we can see the other, accounts receivable are a 14.5% compared to 13.2. We can see that inventory as a percentage of assets has decreased. Now, inventory itself, once again, has not decreased, 111,000 to 113, but as a percentage of assets, it has decreased. Okay, so 113 is a percentage of 787, 14.4%, compared to 111 as a percentage of 644 is 17.2. Everything on here has been divided by total assets. That's why assets shows up as 100%. All right, we can do this as well for the liability and stockholders' equity section of our statements. Everything is still divided by total assets, but assets equal total liabilities and stockholders' equity, so you can either continue to divide by total assets or divide by liabilities and stockholders' equity. So what we can still determine here is that accounts payable make up 9.3% of all of my assets or of all of my liabilities and equity. And we can see that the largest portion of my liabilities and equities are made up by long-term liabilities. And not only are they made up by long-term liabilities, it's an increasing trend in long-term liabilities. Right, so just want you to get a basic understanding of how you can open up an Excel spreadsheet, calculate a vertical analysis, and what does that vertical analysis tell you about the balance sheet and the income statement. And a horizontal analysis going from year to year to year, moreover in trends, what does that tell you about increases or decreases in your income statement and balance sheet? Okay, so we basically, your book gives you one more term here called a common size statement that only reports percentages, removing all of your dollar values. That's okay, we can do that if you just simply want to see those percentages and not dollars. The benchmarking is basically how do we compare ourselves with others. And since financial statements of publicly traded companies are available online, we can always benchmark against our key competitors. My graduate students benchmark Monsanto against their key competitors. They also use Dun & Bradstreet and Hoover's and some other financial analyst websites to help them benchmark against industry averages. Right, so we can see how we compare with our primary competitors and within the industry. And here's a pictorial, graphical example of that between Smart Touch and Learning School. We can see that this is a common size income statement, and we can see income for Smart Touch compared to Learning School. We can see what our cost of goods sold are compared to someone else. So benchmarking is simply a comparison of our expenses to others. All right, we've covered a good bit of information on the horizontal and vertical analysis, I would like for you to take a break, review those notes, and then we'll come back and spend the last portion of our lecture reviewing some ratio calculations.